Welcome back to the channel. I am Delta. I have cracked the code on investing, and Delta Code is where I hand you the keys. Today, I have a special emergency bloodbath report. Everything is selling off. It is bonkers out there. Look at the stocks. Very red. I'm wearing a red shirt just to blend in. That seems to be the color of the day. I will cover lots of markets today, crypto, stocks, even futures and commodities. Nothing is safe. Nothing is safe. Everything looks terrible today. Why? Let's discuss that. What should you be doing in a bloodbath? Let's discuss that. If you are new to investing, I'll show you how to analyze companies and pick winners, sidestep rookie mistakes that quietly drain your portfolio so you'll know what to do and why. If you're already in the game and have some experience, I'll teach you how to use advanced frameworks that pros use to find alpha so you can move with conviction and not with guesswork. And if you're doing this seriously, my deep dives do the heavy lifting. You'll get the research distilled so you can focus on what actually moves the needle. So you can allocate capital with confidence and that fit your risk tolerance. Unless you're doing this full time like I am, it is exhausting. There are thousands of companies reporting. There's endless fire hose of filings, earning calls, and noise. Delta Code is your shortcut to research that gives you back your time and the edge to make it count. Okay, so today I'm going to cover what's happening in the markets, in stocks, in crypto, and in futures. And then I will touch upon a little bit of my blog that I've been writing. I've been making these delta diagrams that help you analyze a company in 30 seconds. I'll show you some of the earnings this week. And then I will also share with you something I call, how do they stack up? How do they stack up? How does NVIDIA, Intel, and AMD stack up? When you compare similar companies, how do they stack up? And I got a bunch of them. How do dating app companies stack up? You got your Bumble, your Grindr, your Match.com. How does SanDisk, Seagate, and Micron stack up when it comes to memory and RAM? How does EV cars stack up? XPeng, Tesla, Xiaomi, and others. Baidu, JD, Alibaba, Chinese companies, Chinese SaaS. How does Meta, Google, and Amazon stack up? All this and more. But first, let's go to the stocks. Okay, now looking good. Technology is selling off. There is some green in healthcare, in consumer defensive. But when we look at futures, everything is sold off except volatility. Let's see here. I hope you can see this. We got silver, 7% down. Bitcoin, 6% down. Let's see, what else? Crude, 3%. S&P 500 down 2.5%. Sugar, everything is down. Now, the most painful part of everything is energy down. Yeah, it looks like it's all over the place. Natural gas up. Makes sense. Why does it make sense? If you're following. Crypto. This one hurts right here. Right here. But worry not. Worry not, chat. Worry not, chat. This is fine. This is our life as crypto investors. This is fine. This is fine. Everybody else is panicking, but this is fine. Yeah, it hurts a little bit. It's a lot. Not gonna lie, it's a lot, but perhaps a buying opportunity. We shall see. ETH is down 10% today. Ouch. Yo. Bitcoin. Almost 5%. Everything else, giant. I don't know why ETH is selling off more than everything else. That doesn't seem right. But what else can we look at here for crypto? Let's take a look at this. 7 days. The top 20 index is down 18%. Bitcoin's down 18%. Ethereum's down 21% in the last 7 days. Solana 22. Hyperliquid is down 11. I think it hit about 70. Also, Zcash down 37%, 383. I sold my Zcash at 600 a week or two ago. Lucky accident. There was a bug in the code, an exploit for inflation. I think the devs have patched it, but that kind of hurt the momentum. And Arthur Hayes, a famous founder of BitMEX Exchange, who's both been hyping up Zcash hype and Near, said he sold yesterday, 2 days ago. He dumped it all, and everything is down 25%. He was almost the catalyst for this crypto dump, in my opinion. The Zcash bug started it, then he sold, and the rest is history. But this is pretty bad. Pretty bad. Especially Ethereum. The RSI is at its lowest that it's been in a very long time. Let's take a look at the trading view. Where's the RSI? RSI. Yeah, it is not bueno. So this type of sell-off usually tells us we're near the bottom, as bad as it does get. Bitcoin's at touching 60,000, going up and down. Ethereum 15, flirting below 1,600. Wow, this is ouchies. Anyways, let's go back to the world market. Quite red, if you ask me. Let's see. That's pretty red. So, what should we do in times of trouble? Little doggy comes to me, telling me it's fine. All right, this is what we're going to do. We're going to take a look at these companies and quickly run at how they stack up. How do they stack up? Do they stack? Are they back? All right. Let's take a look at how to read a delta diagram so you can quickly, 30 seconds or less, know, is this a good company? Should I invest in it? Should I investigate it further? Or not. Okay. First, you have the company, the quarter. FY means fiscal year 27, Q1. So different companies have different fiscal year or where they report, but this is basically Q1 of 26, but that's their fiscal year 27 because they're living in the future, man. Intel had a $3.7 billion loss. Meanwhile, NVIDIA had $56 billion profit. AMD had $1.3 billion profit. Price to earnings growth, 0.5. Okay, let's start from the top. First of all, the black little box in the right corner, I call fundamentals. Fundamentals tells you the fundamentals that can quickly tell you whether the company is overvalued, fairly valued, or undervalued. If it's green, generally those are good metrics. They're within the range of undervalued. We're looking to buy undervalued companies. Red means overvalued, and orange is, okay, it's in the middle. Okay, so PE of 45, 46 for NVIDIA, that's pretty high, right? Their price to sales is 25. So if they were to sell this much and keep all the money for this company to be worth $5.4 trillion, it will take them keeping 100% of the revenue for 25 years. Now, fun fact, their profit margin is huge. It's 67, 70%, something like that from memory. And they're growing just as fast as AMD. So their forward P is 19. So even though it seems a little ahead of itself, if you look at the forward PE ratio, it's reasonable. Price to earnings growth is under 1, which means that's amazing growth. Price to sales is really high. You want to keep it kind of under 4. 25 is insane. But when you have profit margins like NVIDIA, it actually makes sense. I hate to say it. Now, Intel is losing money. Will they turn this boat around? Yeah, I think this year is when they start shipping, what is it called? Panther Lake chip. Oh, I just blacked out for a second. Trying to remember Panther Lake. They have a foundry. They're making chips like Taiwan Semi. They're designing CPUs, GPUs like NVIDIA and AMD. They have a fair amount of data center revenue, but it's not growing like bonkers, but it's in line with AMD. So how do these three compare? You can judge them. Judge them by their peers. Next. I'm going to seriously consider Grindr because this app has outperformed Ethereum. So, yeah. Bumble had $42 million profit this quarter. That's 100% growth from the previous quarter. Its market cap is $375 million. Price to sales is 0.4. Forward P is 2.9. So if they can keep this profit train alive, this is a fundamentally undervalued company. Grindr, forward PE of 14, price to earnings growth of 0.5, and price to sales of 4.4. Sales aren't great, but everything else looks great. That $26 million, $27 million profit, 14 cents earnings per share. That's 27% increase from the previous quarter. If they can keep this on trend, fundamentally sound investment. Wish I could say the same for my crypto bags. Moment of silence for my portfolio. Okay, Match. I like Match. It's gone from 28 to 35 recently. 8 billion market cap. Price to earnings 13, forward 11. Price to earnings growth 0.7. Out of the three, arguably the best one, worth 8 billion with 200 million of profit. It's a 42% increase from the previous quarter. It's a little cut off. Let me see if I can fix this. If I can fix these for everyone. Pause. All right. We're back from outer space, looking at memory that is going to the moon. SanDisk, Seagate, and Micron have seen explosive growth. SanDisk grew 350% quarter over quarter, their net profit. Their revenue grew at 97%, and then massive profit. Even though it's 57 price to earnings ratio today, It's expected to drop to single digits of 9 shortly. Seagate, 69 PE on a $164 billion valuation with price to earnings growth of 0.4 and forward PE of 27, booked a 72%, 80% year-over-year net income for Q1 of 26, bringing in $22.43 per share. Look how fat these profit nodes are, okay? That's nice, very nice. And you can see Micron's just bonkers. It's insane. Tesla doesn't look good. I love the product. The company, the stock, overvalued. And with the SpaceX IPO happening in 7 days, I think, on the 12th, I think there's talk of possibly merging with Tesla as well. So everybody's lofty valuations can be overinflated some more. Anyways, that could also be a reason why there's this happening. Okay? Could be the reason why everything is selling off. SpaceX IPO, also interesting. What to do with that? I generally do not buy IPOs when they first list, as tempting as it is, because the float, the amount of shares that is available, is restricted. All right? Restricted amount of shares makes it so the price goes up generally in the first day, 20% on average. And it is the insiders who already have the shares they can sell and dump on you, despite the assigned valuation that by the market of whatever, $1.5 trillion. Recently, I read that they also allocated 5% of the shares to family and friends that are not subject to lockup, so they can dump right away. That's an interesting fact. Elon and others have to wait the usual 6 months or a year sometimes to be able to dump on you, but Elon's not going to dump because Elon doesn't need the money. Though, not very profitable, especially XAI. Yeah, so I wouldn't touch it. You could trade it short term if you are a god tier trader who can go in and out like a ninja, but I don't recommend that. Not recommended. So, wait 6 months, see a couple of quarters of earnings, see what it makes sense. Let the insiders sell, because when 6 months are up, a lot of people will have become freshly new millionaires, perhaps billionaires, and they will look for liquidity. If they still work at SpaceX or XAI, they're still being compensated in stock and their financial future is tied to that company. So it would be a prudent act to diversify away from this one risk factor for your financial life. So, what is that? December, January? Expect SpaceX to dump hard. Perhaps there's a way to play some derivatives. I will make a write-up about this. We can make some money on it going down. We can bet on it going down. I did this with Circle that went public about this time last year. I bought some put options, did a 10x. At one point, Circle was worth more than Coinbase, even though Coinbase is entitled to half of their profit. So that made no sense. And yeah, short of that, to the moon. SpaceX, I feel, might be the same opportunity. It will be overhyped. Perhaps all of this red in the market today is market participants drawing liquidity out so they can buy the SpaceX IPO. It's going to be lots of money changing hands. Yeah. But anyways, it's a tough day in the markets. If you're invested, I urge you not to panic. If you have cash on the sidelines, perhaps make some opportunistic buys. If you have cash and you're looking to buy even cheaper, what you can do is sell a put option. So you can sell, let's say, Google is currently trading at Goo. Where's Google? All right, this is Google. Is at 366, right? You take Google, 366. Say you would buy Google if it dropped another 10% to 330, let's say. What you can do is sell a put that says, I will buy 100 shares of Google. It will be $33,000 if you have that much. So you need to have about $33,000 on the side. And you're willing to buy 100 shares of Google at $330. It's 370 or 366 today. You say, from now until whatever, June 18, I am willing to buy at 330 and I have cash. This put is secured with cash I have on the side. Give me $1,000 and you can have this contract that will force me to buy 330 if you want from now until June 18. If it drops to 330, you will automatically buy those 100 shares, likely, will be assigned to you. But you also get to keep that $1,000 of premium you got paid for the contract. Maybe more, maybe less, depending what the prices are, depending on volatility. When volatility is high like this and the price dropped, what did it drop? A bunch today, a few percentage points, 2, 3, 4, 5 total. The contracts tend to be more valuable. Now, you don't have to do this with Google and $30,000. You can do this with a $15 stock for $1,500. Just add a couple of zeros because you're going to have to buy 100 shares if that put gets exercised. So if you think it may go lower, you sell the put, you collect the premium. If it doesn't go any lower, you actually gain the premium from the put and you don't feel like you lost out fully. If it does drop to the price you were happy to buy, that's 10% lower than today, then you get that price and the premium. It's a win-win. It's way better than buying right now, unless you are quite confident that this is the bottom. If you have a strong conviction and you want to do this with a particular company you are familiar with, I suggest you choose that strike price for the put and do it with half of the money you would allocate. So if you were going to buy, let's say, 200 shares of Google, I would only sell one put option. And if the price comes down to, let's say, 335, you buy at 335 with 50% of your money, and then you let the put option get exercised and those shares assigned to you at 330, just in case that it bounces off at 336 or something. and you want to buy the dip, but you don't want to miss out. So no FOMO strategy. Make money by committing to buy at a lower price today. That's the strat. That's the strat all. Commit to buy at a lower price today. And if it happens, great. If it doesn't, you still get paid for wanting it to happen. Isn't that great? Type put option strategy in the comments below if you would like a detailed strat on this for a particular company. Say put strat, give me your ticker symbol, and I will look into it. I promise I will look into it. I may write about it. I may make a video about it. But importantly, I need you all to go to deltacode.substack.com and subscribe, because as of late, I have been writing a lot more than I've been making videos, because this is how I do my thinking. Videos take a long time. As you can see, this one's up to 26 minutes now, and then I have to sometimes edit it. I probably won't edit this because ain't nobody got time for that. You're happy to hear me rant, right? But look at all these companies that I have written about that you could have made money if you were just at the blog, just reading the blog, okay? This one, let's see. We'll go in the order of recency. This one, NXPI, down 5% today. Boo-hoo. I recommended it at 200. It's 300 today, okay? That's a 50% gain. 50% gain. Can you say 50%? Now, I want you to read everything, but if you don't have time, please look into the delta diagrams. It's a quick, easy way to digest companies that you might be interested in. And sometimes I do a thinky piece like this one. The news of SaaS death has been greatly exaggerated. Something called SaaS apocalypse. I don't think it's real. Many SaaS companies like Salesforce, Monday, ServiceNow, Adobe have been clobbered over the head because there is this narrative that AI coding tools will make the cost of software go down to zero. Now, this is, in my opinion, wrong. And I have a nice big brain thinky with bullet points, quick and easy read, shouldn't take you more than 5 minutes to read. One of my examples is the company that is supposed to be making the AI to take away all these SaaS companies' products is hiring people for the SaaS tool that it's supposed to eliminate, called Salesforce. So Salesforce is a CRM tool that you use to manage your pipeline as a salesperson, to do your marketing, to take care of your communications, your emails, to put the deal so the company can track. Salesforce is the best. It's one of the biggest companies, SaaS companies in the world. Amazing CEO, and they're using a ton of AI themselves. So they have all this data already in their digital asset lake, as you may call it. And then they connect it all with AI and make your sales life easier. Why would you build your own? You just pay them a bit of money. They're doing this. They're specializing in this. You're not going to build your own CRM. And if you do, it's not going to be as good. And it's going to take you forever. And why? Then you got to do monitoring. You got to pay your AI bill. You got to store your data somewhere. You got to do all this other cloud compute and security. It's a headache. You're not in the business of making a CRM. You're in the business of selling whatever you're selling. So just buy yourself some Salesforce seats. They may change how they price it. They might be like, hey, if we increase your sales by 200%, can we get 50% of that? And you'll be like, okay, thanks to your AI tools. So read this one. It's a good one. Sometimes I go back and I like, okay, this is what I thought about months ago and it's panning out. big brain piece here, this is from February, is that AI is going to make these sales tools better. They're going to ship more. Jensen from NVIDIA mentioned in a speech recently that, okay, come on in here, focus, that writing software is a $2 to $3 trillion economy. And from 2025 to the start of 2026, we are already on track to write 3 times more code, to provide 3 times more value with code written thanks to AI helping programmers write more efficiently and making more tools. I made a lot of tools that I wouldn't have made because of AI that help me analyze companies and make content like this for you guys. So I'm becoming more efficient, more productive. Are you? Is AI helping you? So if we're all more productive, we're producing more at a lower cost, that means we get to keep more money. So there is an efficiency frontier that's going to get pushed out thanks to technology. It is called Y in economics. Productivity frontier is a real thing. When a new technology hits, when you have gasoline vehicles, now you can move goods around more. The total output of the economy goes up. That graph gets pushed out. You have electricity. You got machines that can do more. Now your whole economy can produce more. We have AI now. We can produce more software. It's going to get pushed out. Just imagine, we just, let's say, doubled, tripled the amount of software engineers in existence that are writing code, making products. So those companies that are already writing code, making software, they're going to make more of it. They're going to do it more efficiently. They're going to be more profitable. Okay? Let's say their overhead is still the same, plus AI compute they have to pay for. It's not free, but the value of that AI compute that they're buying and they're using is much greater than what they're paying for. This is how all trade works. The reason you pay your employee $200,000 is because they're providing you $1 million or $2 million of value with their labor. Okay? Same thing with AI. If the tokens produce more value than they cost, they're going to keep buying more. AI train doesn't stop until something breaks, but it looks like choo-choo from here. So only thing is, if some people get laid off, white collar recession possibly could hit demand destruction. All this is ifs and buts, but until it happens, look at the fundamentals of the companies in question, okay? So let's take a look at something like Salesforce or others that are in question of being destroyed by AI overlords and or becoming more efficient themselves thanks to AI. Let me just find me a good example of these dead companies, these SaaS apocalypse companies. Okay, this is one. Monday.com. Monday.com. %2 year-over-year growth. Not the greatest, but could be better. Salesforce, up 18% year-over-year. The company that's being destroyed by AI has made 18% more profit, 12% more revenue, 12 PE. Okay, I'll leave that there. All right, we are hitting a 36-minute mark. I've been ranting for a while. If you know what to do, you know what to do. Subscribe, follow, go to the blog, Substack, Delta Code. Delta Code. deltacode.substack.com. That's where you get your earliest alpha. If you would like a month free, sometimes that paywall stuff makes people appreciate it more. If you like a month free on the Substack, if you're not subscribed, just comment. First, just follow and subscribe, and then write in the comments on any one of the posts. Any one of the posts. What should you write? Let's do some thinking. Write moon math. Moon math, and you'll get a free month for you to experience what it's like to receive premium content from yours truly. If you do enjoy it after the first month, hopefully in that time you have made lots of money from the content, you can pay it forward with a sub. All right, guys. Thanks for tuning in. Sorry about the bloodbath. If your portfolio is not doing great, which it probably is not, I feel you. Mine's this color too. So make sure to stay clear-headed, emotionally calm, have a strategy, and let me know in the comments which company you would like to see a put option strategy for. Until next time, may the force of compound interest be with you. Peace.